everyone and welcome back to my channel. If you are new around here, then I'm Hazel and welcome for your first video. So today I wanted to create a video about my first year being a landlord. So I'm a first time landlord, no experience in the past, no prior knowledge about it before I became a landlord. So I kind of just went straight in, dived in the deep end and just went along with it really. So this video is going to be quite informal. It's just going to be a chatty video talking to you about my experience, my journey, any hiccups I've had or anything like that, maybe things that I didn't anticipate. Just to give you a rundown really of what it's been like, and hopefully it will help you if you're thinking about becoming a landlord too. So first off, I'm going to take it right back to the beginning and just explain to you my journey from the beginning to now. So back in 2018 I purchased a new build apartment, and I had to do this using the Help to Buy equity loan because I couldn't borrow enough to get a full mortgage by myself. So that was, you know, in itself an experience, and I've done videos all about that, so you can go check them out if you're interested in how I repaid that. But after 2 years had passed and we were in 2020, I decided it was now time to repay the government Help to Buy equity loan, and at that point I also wanted to consider letting out the property. So you may be aware, when it comes to having a rental property, you need to have 25% equity in the house or the apartment in order to let it out. So with the initial deposit alongside paying off the government loan and the investment growth over that 2 year period, I had over 25% equity. So that was the first box ticked, and I knew that I could start investigating my options. So the next step at that point was speaking to my mortgage lender and finding out the options with them. Typically when you have a rental property, you need a buy to let mortgage. So it's a specific mortgage designed for people that are looking to rent out a property. Now the mortgage I had was just a normal residential mortgage because obviously I had bought the flat with the intention of living in it. I had no intention at all of renting it out until last year. So that was a bit of a problem because I had a 5-year fixed interest rate, and that meant if I converted my mortgage to a buy to let before the end of the 5 years, I had significant early repayment charges in excess of £8,000. Effectively, it would have cost me £8,000 to convert to a buy-to-let mortgage. So that wasn't really an option for me. So I asked the bank what the options were. They explained there's something called consent to let. So effectively what that is you apply for consent to let against your normal residential mortgage. So your mortgage does not change, your interest rate does not change, none of the terms change. It's effectively asking for permission if you can rent out the property. Now this route is never guaranteed. It's completely at the discretion of your lender. So when you are buying a property, if you're looking to rent it out, you should go down the buy to let route. Getting a residential mortgage and then getting consent to let is literally just in unforeseen circumstances like mine, and because I had lived there for a significant period of time, it was obvious there was no intent to let it at outset when I purchased it. So they actually approved the application. There was a fee for this. I believe it was something like £300, and that was just added to the mortgage. You can pay it up front, but I personally didn't want to, so I just added that to the mortgage, and that was that. So as soon as that got approved, I then started the process of speaking to estate agents. So I had a few different quotes. I just emailed around local estate agents in my area, and that was just to find the appropriate estate agent for me to help rent out the property. Now you don't have to do this, you know, I personally did not want to have to manage it myself. I have a job in financial advice. I obviously do YouTube as well. My time is very, very stretched as it is, and the thought of having to manage a property, potentially having tenants call me at midnight with something going wrong and having to go around them and fix it or find someone to fix it, it just was a stress I did not need. So I opted for an estate agent to do it all for me. So with an estate agent, they come around the house, they took pictures of the apartment, they put it up on Rightmove, and they helped to find a tenant for me. They actually found a tenant within 2 working days of the property going up on Rightmove. So that was really amazing. It went up straight away. It went for asking price as well. That was absolutely incredible. I was so thrilled. And when it came to the tenants as well, I think that's so important to make sure you have good tenants, and that is where estate agents come in because they vet all the tenants, they run background checks, they do all of that stuff for you, and they do let you obviously choose who you want to be in your place. So I did ask for a little bit of information on my tenants, who they were, what they did. My 2 tenants were teachers, so that made me feel really secure because I knew they had a guaranteed job, I knew they had a good job, a good income source, and that made me feel really comfortable that they were going to be high quality tenants. Now there are obviously quite significant fees associated with estate agents, guys. So the first month of my rental income was halved, so they took 50% of my first month's rental income, as well as 12% of the rental income each month too. So every single month it cost me 12% of the rental income. so you take that off. It's quite a significant amount. You are losing quite a lot of the profit each month in that sense, but for me it was worth it because I just, like I say, I did not want the hassle of having to go out. If I didn't have a job, maybe that wouldn't have been as difficult for me, but I just didn't need the stress in my life. So the only thing I'd say is because I have a new build, the chances are nothing's going to go wrong. So effectively the last 12 months there's been a lot of fees incurred in excess of about £1,200 for pretty much nothing, if I'm brutally honest. The whole 12 months of the tenants being there, I heard a big fat zero. Zero, guys. Not one communication at all from anyone, which is a good sign. You do sometimes sit there and think, oh, like, am I ever going to hear an update? But you don't. And I guess that just kind of put my mind at rest and just made me think, actually, it's clearly just going smoothly, and clearly the tenants are happy and the estate agents are happy, but that just goes to show you are paying for not a lot. But I personally view it as I'm paying for the risk of something bad going wrong. Now, if something goes wrong, I still have to pay for it. So let me just tell you that the fee they're taking on is purely for communication and arranging things. So if something goes wrong in the night and an emergency electrician needs to come out, or plumber or something like that, I will be invoiced for the full amount of anything that goes wrong. So I have no cover on that side at all. So yeah, it's quite a lot of money to pay for just someone effectively being on the phone for them. That's literally all you're paying for. So yeah, that's just something to consider, I guess, but that is obviously my situation. And another thing I had to pay out for was a gas certificate as well. So it's about £120, £140, and you have to pay that every single year. It's just a gas safety certificate to review that. So the first month's rent, I lose a lot of money, a lot of money. And 12 months on, my tenants have actually decided to leave, and that's something I have found quite worrying when it happened. It is a it's a one bed apartment, so it was obvious someone was not going to stay there forever. And I think when I look at it as a whole, I do think to myself, I guess a one bed probably isn't the best investment opportunity for me, because you're going to constantly have a turnover of tenants. In hindsight, I think a 2-bed house, a 2-bed semi-detached house would be perfect as a rental opportunity, and that is what I envision doing next time round. But I had what I had what I bought, and there was no point getting rid of it. So that's kind of, it just is what it is. In terms of profits and things like that, I wanted to get onto that as well, because people always assume, oh, like, you've got a rental income, that's amazing, you must have all this extra income each month. That is so far from the truth, guys. So when it comes to renting out a property and all the fees associated, stuff like that, of course you still have your mortgage. Now, because I've stayed with my residential mortgage, I'm still repaying the capital. And until the end of the fixed term, that will just be as it is. At the end of the fixed term, I can then convert to a buy-to-let. I must convert to a buy-to-let. The interest rate will go up because interest rates are higher on buy-to-lets, therefore the monthly cost will go up a little bit. But I can decide to go to interest only if I want to. So interest only is when you just repay the interest each month on the mortgage, and the capital sum that you've borrowed is not being touched. A lot of property investors opt for this route because they want to have that income each month. And whenever you speak to a mortgage advisor, they pretty much say, oh yeah, that's, you know, we can do that. And I personally don't like the thought of that. I don't like the thought of having a big capital sum of hundreds of thousands of pounds outstanding for the whole mortgage term, because what you're going to do in 30 years time at the end of it, when you've got £200,000 outstanding on a mortgage, you know, people do this and they often invest money each month in hope that over the long term it grows and they have a lot more money to show, and they can obviously pay it back and have more money behind them. But I am not a risk taker. I don't like taking much risk. I like to have security in my life, and I like to know things are just getting repaid. So I personally like my capital repayment option, and when it's converting to a buy-to-let, I will be going capital repayment. I view the rental property as a pension. I view it as a pension, very much so. So obviously I get a monthly income from the tenants, 12% instantly gone for the estate agents, and then because I have a flat, there's ground rent and service charge, which is quite a lot of money, guys. I think it's about 150, 160 a month. So again, that is taken off as well. They are management fees for the property, which go up every single year, may I add, and the amount they've gone up this year is more than what I've put my rent up for this year. So I have actually increased my rent for the new tenants in line with inflation, but my ground rent and service charge have actually increased ever so slightly more, so I'm down each year if you look at it when compared to inflation. Yeah, I mean, like I say, you have the mortgage to pay for, the ground rent, the service charge, the estate agent fees, and when you add all of that together and you compare that to the rent I've got, there is very, very little profit and all of that profit and more are eaten up with tax, because you do pay tax on rental properties. You can offset certain things, certain expenses can be offset, but you still pay tax on a big proportion of the money. So effectively having that rental property costs me money each month out of my pocket. So I don't see any money from it, and it actually costs me money. It's not a significant amount, but again, it's something to consider. You do not expect having an investment property and it's actually going to cost you money out of your own pocket. You know, so that's just something that I didn't anticipate. I can't lie. I did not anticipate that happening, but it has happened, and it's fine. I just view that as a pension. I just think, oh, well, that's money I'm putting into a pension, because how I view it is your mortgage is being paid off for you. All the running fees are being paid off for me, and the property is growing each year. So I'm benefiting from the mortgage being paid off as well as investment growth. So I view it as a win-win situation. I don't mind. I know a lot of people out there probably think, oh God, that's not an ideal situation, but I don't mind. So that's just kind of how I feel. But again, this is just my journey. There's no right or wrong. This is just my experience, and maybe I'll look back on this in 5 years' time and think, wow, Hazel, you were an idiot. Yeah, that is my waffly all over the place experience on having a property. So I have to say that it's been very, very smooth. Other than kind of accepting the financial side of things, it's a very smooth journey for me. I don't really have any worries. I rarely think about it. It's nice to know it's all in hand and someone else is dealing with it. Long term, my plans, because I'm sure you guys will probably want to know my plans long term. So with rental properties, when you come to remortgage, so when I get to the end of the fixed term, obviously I can then convert to a buy-to-let, and at that point you can actually strip out equity if you want to. So at that point I will be assessing any equity above 25%, because you have to keep 25% in there to have a buy-to-let mortgage. Another thing, guys, you have to have income of £25,000 gross or above to be accepted for a buy-to-let mortgage based on current legislation. As long as everything's all good at that point, if there's equity above 25%, I will be considering stripping that money out and adding savings to that sum to then get a new property. So I like the idea of almost recycling the money from one property to the next. Obviously you're taking out equity, so the mortgage is then a little bit increased, but it's a long-term investment for me, and it's about maximising as much money as I can with the money I've already got, if that makes sense. And I view that as a great way of doing it. Stripping out a bit of money, adding to it, get another property, and then you've got another property that's being paid for each month by someone else, and all the investment growth that goes alongside it. So that's kind of my longer term plans of being a property investor. Again, I'm 1 year in. Who knows what the future's going to hold for me. As I often get asked as well about all the costs involved with it. So I pretty much explained all the costs to you guys. All the costs I've said are the costs that I had to pay for doing this, but there are also costs such as stamp duty. So when you are buying a second property, the stamp duty is significantly higher. So there's calculators online. You can simply just type in stamp duty calculator online, and there'll be so many, and you can run through it yourself looking at what you're looking to buy. But that is something to consider. You will pay significantly higher stamp duty rates when you already own a property. So say you have a main residence and you're looking to buy another, you will pay significantly higher rates of stamp duty. Ultimately, you will have to budget for that too. Don't just budget for your deposit, budget for the stamp duty and all the solicitor fees and legal fees, because they are pretty damn significant. If any of you are interested in solicitor fees, legal fees, I can do a video about all the costs that we incurred by purchasing this new house we're in now, because I know a lot of people do not know, you know, and you're not meant to. How are you meant to know? If no one tells you, you're not going to know. I didn't have a clue what the fees were. I'm just completely learning on the job with all of this. So yeah, if that's something you're interested in, let me know. I've done videos before about all the costs of running my flat that I had before in terms of just living in it, so that might be something you want to go back and check out. But I'm very much open to doing lots of videos. I don't think these things should be such taboo topics. People get funny about talking about money, but I think we should be able to talk about money. I think it's healthy to talk about it. It's good to know what things cost, and the less it's spoken about, the more people are ripped off ultimately, and the more you go with things that you don't really understand and can make mistakes and get it wrong. I think it's very, very good actually to speak about money and to just, you know, not necessarily tell people what money you have. I'm not going to be disclosing my exact figures for my income and stuff, but I think it's good to just talk around the topic of money and just to be a bit more transparent and a bit more real about it. So that is why I'm here, hopefully to help you guys with it. So I've really enjoyed filming this video for you. It's been a little while, if you are a regular, that I've done any financial content. I've just not had anything to talk about really. You know, there's only so many topics I can cover, but I feel like I've got my mojo back a little bit for it, and I've got some ideas. So I really hope you enjoyed this first video. I can do some more buy-to-let or rental property videos. I don't know how much more information I can tell you, but maybe I can do a pros and cons video, something like that, or things to consider. But yeah, I really hope you guys found this video helpful. Let me know if you're thinking about getting a first rental property, or have you got one already, how are you finding it, all that good stuff. And I also want to say as well, I think having a new build, in my opinion, is the best, because you've got a property with the NHBC guarantee, I think it's called. So I have a 10-year guarantee with my flats. If anything goes wrong, it is covered. It does exclude things like the boiler, but for the most part, everything is covered. To say something goes wrong with the bath, the kitchen, etc., it is all covered. And I absolutely love that. You are paying a premium for a new build, but ultimately you're getting a brand new house. I think when you're renting a property out, you want something very attractive, very desirable, and the more modern it is, the more fresh it is and new, people are going to be wanting to snap that up instantly. My flat just went up for rent because obviously the tenants were, you know, told me they wanted to leave, and it's been rented out within a matter of about 3 days of it being up on the market again. So the market is booming right now, so that's not really a fair representation in the long run, but I think you're much more likely to get constant ongoing people interested if you've got a very brand new shiny sparkling place. I forgot to say, the tenants that are now moving into the property actually work at a university, so much like the first tenants I had who are teachers, I think it is important to have people that have good jobs, because ultimately you want someone who has a stable, reliable, good income. And I think a job like a teacher, for me personally, sits very well with me versus something that could be a bit more unstable, because ultimately if the tenant doesn't pay, it's not as simple as just kicking them out. That is a risk when it comes to rental properties, and you can of course try and get them in trouble and all that stuff and go down certain routes, but you're probably going to be the one ending up losing out in fees, legal fees, all that stuff. So that is a concern of mine when it comes to rental properties, and that is why I always look and hope for higher quality tenants, basically. I think it's very, very important, and that brings me back to my point of having a high quality property. If you have a bit of a rundown property, obviously the rental income opportunities are lower. Again, this is just my thoughts on it, guys. From an investment point of view, I have to care because it's my pocket that's going to be stripped if someone can't afford it. So that's just my honest opinion on that. And I love the fact you get the new kitchen, the new bathroom, all that stuff, because if you buy an older house, you're going to have to do all that again, or have a property that is a bit old and people might not like it. So that is just my opinion. So I really hope you guys enjoyed it. Give the video a thumbs up if you did. Make sure to subscribe if you like property content, if you like finance content, these sort of discussions, because we have loads on my channel. So just go back on my playlists, and there's a financial playlist on there with tons of content, if that is your sort of thing. I also have Instagram as well. I would love for you to go follow me on there. I have a property Instagram and also just my main Instagram too. So I'll leave them in the description box down below. So thank you guys, and I'll see you soon. Mwah. Bye.